What's up, everybody? In today's video, we're going to talk about trading and a technical analysis system that works for some people. I don't really trade at all, and I preach not trading, but, it's kind of like what the cool kid's mom used to say. It's like, oh, you can drink as long as nobody drives home. You can do a little trading as long as you don't get yourself wrecked. So by no means am I supporting trading. I actually have a course that teaches you exactly how to not trade and make money passively, but I learned a technical analysis system that I paid $600 for, and I figured, hey, I'm trying to provide value here. Why not just give you that $600 course for free? I'm not going to tell you who I got it from or where I got it, but just know that people pay a lot of money for these courses that are really, really quite simple. And I'm going to break this thing down in a way that's very digestible, and we should be able to do it within 10 or 15 minutes. So let's get right into it. The technical analysis system for just general trading, and this applies to crypto or everything, you just need to have rules that work for yourself and do money management, right? Never bet more than 10% of your stack, and manage your money, meaning always do stop losses, and never bet more than you're willing to lose. Nobody ever really follows those rules, but that's how professionals actually do it without getting totally wrecked. Chances are you're not going to do that, and you're going to get very, very wrecked. So again, not advising trading, but here's a $600 trading system that starts with candlesticks, right? And now the system itself doesn't really even matter that much. It's more that you have a system and you follow rules consistently. Now, I'm terrible at doing that. That's why I don't trade, and I promote passive income instead. But that's how the real pros actually do it. So candlesticks, right? When you're trading, you also have to get really, really good at looking at the right side of the chart, meaning just what's happening recently in the most recent candlesticks. Now, candlesticks in priority order are the most important, which is something I didn't really realize before, but you can tell a lot about the price action of something by its candlestick shaped pattern. Now, the candlesticks that really stick out, that really matter, are dojis, which if you look right here on April 5th where my cursor is, that's kind of like a doji, right? It's almost like a Darth Maul lightsaber, right? It's got a really long wick on the top, really long wick on the bottom, very, very small body in the middle. Or hammers, which are, very, very large wick on the bottom and very, very tiny body on the top. That's like this most recent candle that we've had on this hex chart up here. And then dragonflies are just hammers but turned upside down. Right, so those are the three that matter. And why do those matter? It's because by the shape of the candlestick, you can tell that there's a lot of back and forth fighting between buyers and sellers, but that they've most of the time basically consolidated or came to a consolidation at a very specific level. Now, the doji candles, because they're equal wicks high and low, it's more of a continuation pattern because it really shows you that, hey, the bulls and the bears are fighting it out, right? It's a constant battle, but nobody really won. Now, for the hammer patterns, where the body's at the top, the small body and the long wick at the bottom, that's actually a bullish signal because it means that, bears were trying to sell the price down, but it kept getting bought back up, kept getting bought back up. So it's a sign that sellers are getting exhausted and that buyers are starting to win, or the tides are starting to turn in the buyer's favor. Now, dragonfly, totally opposite, right? It tells you there's a lot of buyers trying to wick the price up and a lot of sellers that keep smashing it back down. So it smashes down that big top wick into a tiny bottom body. So that's candlesticks. Hammers are bullish, dragonflies bearish, dojis neutral or continuation, sometimes reversal patterns as well. So those are really the three candlesticks you have to look out for. Going back here, so we talked about hammers and dojis, then we'll talk about chart patterns. Now, the only chart patterns that we really need to worry about in this very simple, very rudimentary TA system is triangles and pennants, right? Let's go over to talk about triangles and pennants. I like to go to the Bitcoin chart for this because there's a very iconic triangle that happened after the 2017 bubble where it was actually a descending triangle. And triangles are pretty easy to see, guys. I mean, you don't have to be a rocket scientist to know what a freaking triangle is, okay? It's a triangle. You learned it in preschool. So you can see right here, this is one of the most famous Bitcoin triangles of all time. And they're formed by, elongated base with lower and lower bounces. Or, if it's a reverse ascending triangle, higher and higher bounces, right? But this is almost like literally in physics, like if you drop a ball and the ball bounces, but gravity keeps pulling it down. And because of the potential energy keeps getting less and less, the ball bounces lower and lower every time. So you can see it almost literally looks like a ball dropping on a floor and bouncing and bouncing and bouncing until it's just coming to a dribble. And then there was that painful, 2 or 3 months of just sideways action where everybody was anticipating the drop. And then when they drop, guys. So descending triangles like this one with right angles and a descending hypotenuse, that means that a drop is most likely imminent. Not all the time, but there's a higher probability generally that it's going to break out to the downside. Ascending triangles, exact opposite. The hypotenuse is positive in the upwards direction, And you can say that, with a reasonable degree of confidence that it might break out to the upside. Now, the thing about TA is that it's never always right and it's never always correct, right? So you can never totally trust anything. And there's a lot of theoretical, philosophical debate about whether or not TA is just one big confirmation bias. That's like a shared reality between everybody. And to a degree it is, but, you can't argue with probabilities, guys. So it's just one of the many arsenals to make your decision on whether or not to buy in or out of something. And flags as well. Pennant shapes are equilateral triangles that happen usually at the top of a big spike or the bottom of a big drop. And generally they're consolidation signs for another big spike up or down. So a pennant at the top of a bull flag, we call it a bull flag with a pennant on top. That's a continuation to the upside. A bear pennant would be a continuation to the downside signal. All right, the TD indicator. The TD indicator is an indicator I got from a certain individual that is kind of useful if you're looking to actually time the trade and mark your entry and exit point. Now, this is where, a lot of people are unsure about how to actually get in and out of a position. And again, I only like to look at, not only do I like to look at the right side of the chart, but I prefer bigger timescales, meaning even if I do take positions, I'm usually looking at months and weeks, not days or anything less, but the daily chart is about the lowest I'll ever really go just to see what's going on price-wise. To be honest, guys, the way you really make money in crypto is by holding things for the long term, which I teach you how to do in my course below. But back to the trading stuff, I'm on the daily timescale right now. And again, that's as low as I'll probably ever go. And the TD indicator, I think it comes with TradingView, or you can buy these custom TD indicators like I'll show you right here. And it basically just counts to 9. It's a momentum indicator that is calculated based on, whether or not one candle is greater in value than a candle 4 candles previous to it. You don't really need to know the mathematical formula. You just need to zoom in on this. And basically, if you can count to 9, you can do this TD entry and exit strategy. So let's find a good entry point where the TD count is actually 1. Oh yeah, so here's a great one, guys. Look, I just zoomed in on this chart a little bit. You've got the 1 right here. A green 1 is indicating a potential bullish entry. And when the green 2 closes above the green 1, right? Sometimes if you're confident enough, you can get it before the close, but you want to wait for the close generally to be super confident. So when the green 2 closes above the green 1, right? So you have to wait for it to close. So the day is over. That's your buy signal, right? And then you want to ride that all the way up to the 9. And the TD9 signal is generally your selling point. So you basically just ride it up 3, 4, 5, 6, 7, 8, 9, and then you'd sell at the 9. Now, if you see a red number, if a red number closes sooner because not all of these cycles complete to 9, then you exit your position. Obviously, you always set a stop loss as well, and these green lines and red lines help you set your stop losses. So the green lines are like your bull stop loss positions, and the red lines are the bear stop loss positions. And again, same thing in the reverse, right? If you have a red 2 that closes below a red 1, you're going to want to take a bearish position. And I never ever recommend shorting because your potential for loss when you short is literally infinite. So only long, guys, only ever long something. Don't ever short something. It's really just foolish. I don't even need to get into it right now. It's just a one-way ticket to Rexville. So again, green 2 closes above a green 1. That's when you get in your entry point. You want to sell at the 9, but again, chances are you might get stopped out or you might not make it to a 9. Like here, this cycle made it to an 8. This count 1, 2, 3, 4, 5, 6, 7, 8 went to a 1 and it didn't make it to the 9, so you would just have sold there. So you would have bought at this point and you would have sold at this point for a very, very tiny profit, right? So again, that's why trading is not nearly as good as holding for the long term, not nearly as good as making passive income, like I teach in hexpassiveincome.com. But let's move on, guys. Let's move on. Very simple. A 2 closing above a 1 indicates an entry position, and a 9 or a reversal, meaning a non-green number or a non-red number, indicates an exit point. Or if you hit your stop loss and get liquidated, that's an exit point too. Next, we've got support and resistance lines. So support and resistance you've probably heard of before. Now, what a lot of people don't realize is that there's not only horizontal support and resistance lines. So, for example, in this chart over here, we've got a really good example of a really strong top horizontal resistance line. And resistance lines tend to get broken. And when they get broken, they become support lines. As you can see in this hex chart, we hit this resistance 1, 2, 3, 4 times. And there's a saying in TA, there's no such thing as a quadruple top. So you can see around the 4th time we hit it, we blasted right through it. And now this resistance is going to become a support. So they flip-flop, right? They're like magnets, but once you break through the other side of the polarity, it becomes, the opposite. So horizontal ones are good, but also what a lot of people don't realize is that moving averages are actually support and resistance lines too. So we look at moving averages, moving average crossovers, but they also act as support and resistance lines. So as a brand new person, this is something I didn't realize before, but I'm trying to give you all this info in about 10 minutes. Look right here, we've got the triple moving average forecast. It basically uses a 20, a 50, and a 200-day moving average. And that's pretty close to a 3-week, a 7-week, and a 50-week moving average. So it's almost like, different intervals of a year. But 20, 50, 200 is the trio that a lot of people like to use. You can see the blue is 200, the purple is 50, and the orange is the 30 moving average. But look at the 50 moving average, right? Look at how many times the price chart just kind of bounces off that red point right here, this purple line right here. And look at when the price bounces off that purple line right there. So I didn't realize this either at first as a newbie, but moving averages crossing over is not the only indicator. Moving averages are actually more useful as support and resistance lines, which is kind of crazy, and I think that's just due to self-fulfilling prophecy. So horizontal or moving averages, right? Support resistance lines or EMAs, SMAs. And again, the 20, 50, 200 is the combo. Finally, we've got oscillators, right? Oscillators is just your very back priority. Keep it in your back pocket if you're really not sure whether or not to get into a position or not. It's the final thing you factor in, and it's very, very simple, guys. I'll pull up the RSI right here. You can see on the bottom of the screen, this comes built into most trading software, and it's just I'm on TradingView right now. It just, when it's overbought, this is generally a bearish sign, and when it's oversold, it's generally a bullish sign. So you can see we've been overbought a lot, and we were overbought right here because the red line was above the 70 RSI, and then what do? We dipped a little bit. Now, it's been a long time since the RSI in Bitcoin was below the 30 RSI, but usually the 30 RSI is your buying opportunity, right? The 30 RSI is your buying opportunity. The 70 RSI and over is your selling opportunity. But these oscillators can stay irrational longer than you can stay solvent a lot of the times. Look at the Bitcoin one. It's just been on a tear, and it's been, over the RSI for a very extended period of time, and probably would continue to do so. I see no reason why it shouldn't. So there's also a couple, different oscillators we like to use, the stochastic, the MACD. They basically all just signal a binary yes or no. Is it time to get in, or is it time to sell? It's very simple. But none of these single things should be used alone. They should all be used in tandem. And this is the system that I paid $600 for, that I'm giving to you for free. This is basically the priority of how you prioritize the entries and exits, right? Are the candlesticks right? Is the chart pattern right? Is the TD indicator indicating an entry point? And what are the support lines? What are the oscillators? Just so we know, is it some extra confidence to get in, out, and maybe some extra confidence around where to exit. So I just told you all that stuff about trading, and quite frankly, guys, trading will just, it'll eat up all your time. And if you're not doing it full time as a job, like working for a trading desk, it's not really that feasible. I prefer to earn passive income with a coin called Hex. And so if you're brand new to crypto, I've got a course in the description below. Go ahead and take a look at it. It's half off right now. So make sure you try to learn these passive long-term investing strategies before the bull run takes off. And if you're experiencing crypto, hopefully this was semi-useful for you as well. I'm not telling anybody to go trade, right? Not telling anybody at all. Just wanted to give a crash course in as short of possible time as I could about a trading course I once took that actually didn't make me any money, guys. So I just told you all that stuff, and the real twist here is that none of that made me any real money. I was lucky to actually have it broken even during trading back in my trading days a couple of years ago. But, it really just ate up all my time. I was a slave to the charts. I could never look away. And now I've got a much better system that works for me, and it works for thousands of people. So is there a right way and a wrong way to do crypto? Yes and no. I think there is, but other people would disagree. So anyway, guys, that's the unknown trading system for free, and a much better system in the description below. Thanks. Have a good rest of your day.